Trading financial sectors. What are the sectors? Just as you can spread bet on individual stocks, you can also place bets on entire industry or sector groups. While there is nothing wrong with speculating on individual companies, there are reasons why this may not be the most efficient method to take a position. The problem is that even in cases when a sector is performing well, some individual shares may be underperforming the group, and this risk can be mitigated by diversifying your investment across the entire sector. Sectors can be seen as collectives of companies that represent a particular market. For instance, British Telecom and Vodafone come under the sector called telecoms within the FTSE 350. HSBC and Barclays plc would come under banking within the FTSE 100, as would Wells Fargo come under banking within the Dow Jones Industrial Average. This approach can be very useful if you prefer to gain exposure to a broad base of underlying shares, diversifying your risk. There are some 28 sectors that you can spread bet on the UK market. The contract lengths for sector betting range from daily to quarterly only. Some spread betting providers also offer a rollover trades. Spread bets on sectors work in a very similar way to trading individual equities. Suppose you decide the supermarkets are going up in the near future. Your spread betting provider quotes you a price of 4182 to 4201. You buy at 4201. A couple of weeks later, the spread is 4502 to 4520. You decide to sell at 4502. So your profit amounts to 4502 to 4201, equaling 301 points. Note that some sectors provide a more diversified exposure than others. For example, while the automobiles and parts sector only contains 1 or 2 companies, general retail and support services each have more than 20. Also, do keep in mind that within each sector there are just a few heavyweight companies that affect whether the sector moves up or down. For example, within telecoms there is BT. Interestingly, you can also use sector indices to take advantage of seasonal cycles, such as the tendency for the mining industry to outperform the general market during the initial 3 months of the year, or electricity's winning record in the third quarter. So, for instance, to speculate on the mining sector outperforming the market during the first 3 months of the year, you could do a long trade on the sector and a short trade on the FTSE 100 index. A sector index is especially good for trading longer-term trends. It does not experience the same level of intraday volatility encountered when trading in individual stocks. In fact, trends can be both long-term and substantial. Beware that sector betting is often an illiquid market. The spread of risk usually means that sectors do not offer the full potential to make the large returns of some individual bets. A short bet on a company that warns of falling profits is likely to outperform a trade on that company's sector. Also, spreads on sectors tend to be wider than on individual shares. A sector index is especially good for trading longer-term trends, as trends can be both long-term and substantial. The mining and financial sectors tend to be very popular with spread bettors. This can be attributed to their volatile nature, offering punters short-time trading opportunities. Curiously, you'll be surprised how close the UK and US sectors track each other. If you're looking to spread bet sectors, I would advise you to specialise in 1 or 2 sectors and learn as much as you can about each company that is listed in that sector.